traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted a chart in here. If you remember, on the 5th of January, we had a new guest, Mike Moore, More Analytics on, and Mike had a prediction for us that day, and I posted it here in the room because it's rather amazing, folks. On January 5th, with oil trading at $73 a barrel, he said you should be buying crude oil now because we should be in for a strong rally. And folks, it had a pullback today, as you can see, right to the 382 of that move, and it's still going higher. But the whole thing is, you can stop and think, that moved $9,000, folks, with very little heat. And you can see the pullback today was exactly at 382, and it rallied another $3 a barrel. So we have to pay attention with what Mike Moore is going to be talking to us about. He'll be on at the first break, and he's got some great information on the S&P, but particularly in the energy markets is what his specialty is. And I think you have to be impressed with that prediction. Of course, guess what? It's like the restaurant business, Mike. What do you have for us on the plate today? Anyway, we'll have Mike on to have him chat with us a little bit. We got some really interesting things going on here, folks. Those of you that will remember, we were looking at this big market here in the S&P yesterday up at that, and I'll put the NASDAQ in also, but here was the chart that we were selling the S&P up there at 40.30, and our price objective today is right here at right around 8,900, 3,900. Boy, my numbers are a little off today, but 3,900 is the number I said, to get ready to cover the short right there and sell it on a 382 rally to the upside. Now, the difference was, if you take a look at what was happening in the YM, and the YM is really amazing, folks, if you take a look at this today, because the number we were watching in the YM, and we are definitely out of the S&P short side now, but as you can see here, we hit the 78% retracement here and rallied 300 points this morning, and then made a new low by just a couple of pips, and then it's bounced back again. So this 78% level is pretty important. Anything closing below that would be quite negative, but when you make 70 handles in something in 2 days, I mean, you have to say that's an outlier event. You don't see them happening very often, and the fact that it's right down in this zone where we think it should be covered, that's why we were covering it. So I hope that makes a little bit of sense to you. You remember when the S&P was making the same number, and this is while we were on the air, folks. This was not something that we made up earlier, but this is where we were yesterday, right when we were on the air. I saved this chart because there's where we were right there. Perfect ABCD Gartley, right out of page 222 of the book. Right there, you can see, and then we had the big sell-off this morning, and I'll post to show you where we are because we're much, much higher in the NASDAQ. It's not nearly as bearish as we're seeing in some of the others. So I think we have to pay close attention to that, because if the market should turn, and sometimes they do, then you've got to be able to say, yep, this is one of those times when you've got to pay attention to that. And I cannot find the darn thing now. What did I do with it? Oh dear, this is embarrassing. Well, I'll put it up at the break. Not going to worry too much about it, because we've got to take care of a little business here, folks, and that is natural gas. We have been waiting for natural gas, and we're right now, folks, between the pedal and the metal. That's the only way you can put it. I want to get up here to show you. This is the weekly chart. I want to walk through this because This is what we do with pattern recognition swing trading, and you can't get a better example than what we have going here in natural gas right now. You can see this is the weekly chart. We've gone through this many times. You can see the ABCD has completed. It's been 8 weeks down in the AB leg, 8 weeks down in the CD leg, in matches with time and price. That's why it's so very, very important. Now, if you'll remember, 2 days ago, we posted this chart. You can see from the 18th, well, it was yesterday we posted it. Sorry, it wasn't 2 days ago. Get this up here, and there's where we are. One bad thing about doing a live show, you can't pre-record it. Okay, here is the 15-minute NASDAQ natural gas chart. You can see that we have an ABCD pattern forming right here. That low, folks, was 319, okay? 319 was the low we were looking for on natural gas based on that chart, okay? Now, if we go back and if we take a look at that weekly chart one more time, and I want you to see where we are because where is the darn weekly chart? Here it is. Just 1 second, and I'll get it up here. I want to walk through this morning to show you what happened because this is what's really exciting. Here is where we were early in the morning with the NASDAQ. Now, I trade 15-minute charts because it gives you a lot of opportunity with very low risk. And this thing moves a lot. You can see the really nice triple bottom here. That's what this low, this took this out by 10 cents. This took this out by 10 cents. So look at that. We have a really strong rally. The market pulls back to the 382, and then it looks like it's going to take off and run for the roses, okay? Well, folks, the roses aren't always that easy. So I wanted to show you what happened with that because the importance of what we hit when we hit that number. Here's where we are. I'm going to get this updated because when these numbers are in there, they're not. This is why these algorithmic traders, do such damage to your portfolios if you're not prepared to see markets reverse. There's where we were. It looked like we were heading up, to go straight up, and we stop right there. And look, we come down and we make a low, and look at the low, folks. 39.22 is what we were looking for. The low was 39.19, right on the money. And this is pretty much up to date now. We're right in this zone here, just chopping sideways. But this is really important because this should be the low in the natural gas. So that's what we're paying attention to because it's really important because if it works the way we think it is, we're going to have a pretty big move in natural gas. Now, do we know that it's, and not only that, I wanted to bring up one more time, and that's the cycle work from Dr. Richard Smith at the Foundation for the Study of Cycles. This was from his program, the Cycles program this past week. And you'll see this is the week. This is the 11.5-month cycle, and it's due in this week. And there's your A, B, C, D. You see, you don't need this cycle work if you've got A, B, C, D, and that's what I rely on. I bring this to your attention because it may or may not mean something. All I know is that A, B, C, D pattern really means something, but this cycle thing, it might be off by 2 or 3 or 4 weeks. You can't be off 2 or 3, 4 weeks in these markets, folks. You got to be a little more precise than that, and that's what ABCD tries to do, is to get you in that zone where you're able to, say, yeah, I have a pretty good idea where we are. Let's take a break, and we'll be right back. Michael Moore will be joining us next, so stay tuned for Michael Moore of More Analytics. We'll be right back, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Mike Moore of Moore Analytics on the line. Mike, are you there? It doesn't look like it is. Good old technical difficulties. Got to love them, don't you, folks? Hopefully we'll have Mike on the air just as soon as we can connect with him, and we'll try to move on here. I'll give you some other things that I wanted to share with you. If you'll remember, on Friday we had Peter Elides on. This is really worth showing, folks, because it's been so spot on accurate. I think we have to pay attention to it. This was the chart that Peter Elides posted to us on Friday. And hold on just a second. Oh, sorry. We've got these Palo Verdes here. We had a big storm here, and as soon as the sun comes out, the Palo Verdes bloom, and they come searching for me. So that's where I feel great. It's just that I sound like not too much. Anyway, this is the VIX index on the top up here, the S&P on the bottom. Peter said, be ready for a market to change trend on Friday or Monday, because we had just made new lows in the VIX, all-time lows. But yesterday, if you'll remember, on our show 24/7, we had as our guest Jeff Huge of Alpha Insights, and I wanted to show you his chart because what it is, it's a blown up section of the last part of Peter's site. So they're looking at pretty much the same thing on volatility. And as you can see here, just as the market looked like it was never going to go down, you can see the spike in volatility. And there you go. You can see what's happening with the prices, going on with what's going on right now. So it's important. We'll keep that up to date when these folks have these charts come up. I don't follow volatility stuff like this, but they do. And it's always helpful to see, other people's approaches as far as timing. And that's what this was all about. Does it work all the time? No, but it worked 9 out of 10 times. So that's pretty good. I mean, you don't get 9 out of 10 odds very often on some of these things. So we're still trying to get Mike Moore on the line. hopefully we'll be able to get him on the line and we'll be able to do it. It's a tremendous call that he made for us. We will have him on again. Even if we can't get him today, we're going to have him on again soon. So hopefully we'll be in that ballpark of where we're looking at these things to put together. Okay, I wanted to bring to your attention here a couple of things, in the fact that we are holding these levels just by a thread here at 3,900 in the S&P and also with the Dow Jones. They haven't bounced very much, but that doesn't mean that they can't. But they need to close above those levels, above 3,900 in the S&P today. If we don't, that's going to turn the whole model to the downside, because that means that the Dow Jones, which has been right at the 78% level, would be breaking below that, and that would be in itself, very, very bearish. So that's a couple of things that we're watching as we go through these patterns and trades that we have on today. Now, I wanted to bring one more chart to your attention because it's been extremely bullish here recently. And of course, it had the big ABCD bottom here about 4 weeks ago when we were saying this is the start of the bull market rally here it's actually a bear market rally in Treasury bonds. And as you can see here, the rally that we had yesterday came off of a perfect 382 retracement here. And then we had another one, and then another one, 3 in a row. On a strong trending market, folks. When you have strong trending markets, look for 382 retracement and go to that level right here. Okay, people have asked about the Las Vegas seminar. There's not going to be a Las Vegas seminar, folks, because I've been under contract with the Money Show for many years, and I am not able to give a seminar in Las Vegas 2 months before or 2 months after a Money Show, and they have them every quarter, so it's impossible for me to do my own show over there, so I'm not going to do it. Not a big deal. Anyway, that's what Tom Hugard might still, and I might be his guest, but I can't be a headliner, so that may or may not happen. Frankly, I don't think that it will. Anyway, pay attention when you have these real strong trending markets here, because when you see those strong trending markets, look what we just did in crude oil that Mike Moore talked about when he was on our show on January the 5th. I mean, this was an amazing call that he made, for heaven's sake. Let's get it up here and take a look at it. And then you'll see exactly where we were here at the 382 retracement this morning when it was trading below $79 a barrel, and we rallied $3,000 basically straight up. And so that's why you want to pay very, very close attention to that. So let's remind ourselves that's where we are. Okay, now a couple of questions that people have asked me about, and that is the E-mini S&P on a little bit longer time frame. Well, folks, we do longer time frames. We do it on just about everything that we look at, dailies, weeklies, and what we do is we go down to a smaller time frame, of course. But all we're looking for is to find a market that's going to give us a really nice, all I got to do is find the darn thing. And, well, let's do the NASDAQ because that was the easiest one of all. Get the NASDAQ up here. Hold on one second here. This is the NASDAQ daily. Then I'm going to update it from what I just did a little while ago because the high yesterday was right on that 61% retracement. You see, it was on its way to make it right here. That's what we were looking at. So all we were doing yesterday on the show was I was just updating that hourly chart so that you could see what the NASDAQ was doing. Unfortunately, I can't find a NASDAQ chart, and I know I brought the darn thing up here. So what I will do, here it is. I found it. Yippee-yi-yay. Here we go, and I'll show you where we came to today because we've had a pretty substantial break, but nothing like we've seen in the S&P or the Dow Jones. All we've been able to do now is to come down to this level right here, just a little below the 382. That in itself could be very, very bullish. Stop and think. The S&P came all the way down to the 61% retracement at 3,900, the low 3,901, okay? Now the Dow Jones Industrial Average, just on the other hand, and this is what Basil does when he does his shows, he's look at these bifurcated markets and how they're moving around. And if you look at the Dow Jones, you'll see it's been much, much weaker all along. And as we look at it right now, as we're speaking, get up here and take a look at it. There it is, setting right at the level right here, and right at the 78% level. Not only that, folks, that was a 300-point rally after the first low, and it came down and tested again, and it's actually holding. Well, it was a little while ago. I don't know what it is now. Yeah, it's still holding. It's 150 points higher than what it was, and the Dow Jones and the E-mini has rallied 19 points off the bottom. So that's telling you that you got a pretty good chance here for this being at least a tiny bounce. If nothing else, it's going to be, and maybe we've got 2.5 hours to go. It could be a spectacular bounce. I don't understand why I'm not able to get Mike on the line, but I'm not going to worry about that. We'll do one thing at a time. Now, also keep in mind what's happening with the euro here, folks, because we brought this to your attention yesterday. I want to get this. Oh, here's the NASDAQ. I finally found it. Doggone it. Let's get this up here. And then we got a break coming up here. 877-927-6648. Al.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. I believe we have Mike Moore of Moore Analytics on the line.
Yep, I'm here. How you doing, Larry?
I'm good. Mike, do you have any cowboy relatives out here from the 1865 level, particularly by the man named Les Moore? Do you know that name?
No, sir.
It's one of the most famous tombstones in all of cowboy folklore, and it's a real tombstone. It says, "Here lies Lester Moore, shot 4 times with a .44, no less, no more," and it's spelled the same way yours is.
Oh, really?
Yeah, it sure is.
Maybe
You
it
can
was
go
a
on.
distant
You
relative. Who
can.
knows?
Yeah, you can go and Google it. But of course, I live near Tombstone. I'm only an hour away, and it is actually a Jewish national cemetery. So it's pretty cool. It's the same name. I just happened to think of that when we're starting. Mike, you made an incredible call on January 5th when you were our guest for the first time. You said, right now is the time to buy crude oil. And by golly, it's been up every day since, and including today after being down $3 a barrel. So what a great call. Why don't you tell the folks what you're looking at today?
Thank you. Why don't I just show you here? I'll do a screenshot, okay?
Sure.
Can you all see my screen okay?
Well, they're going to let me know as soon as it pops up. We'll be able to see it. Yep, it's up and running. So fire away.
Okay, wait. I think I just switched it by turning on my video. Let me do that again. Can you still see my screen?
Yes, sir.
Okay.
We're in good shape.
So this is the crude oil. We were holding this exhaustion level down here, and right as we were about to get off last time, you said, "Is there any major thing that I see?" And I said that this could likely start a whole new bull structure, which we've seen in here to the tune of, I guess, $9,000 or whatever. I also just wanted to remind you, we were talking a little bit about the crack spreads, which is a spread between the underlying crude oil and the product of the crude oil. And by paying attention to what these spreads do, they can tell you which product is leading the market in a certain direction. So if you recall last time I said that the heating oil or the RBOB, another term for RBOB is unleaded gasoline, they are leading the direction of the crude oil probably around 85% of the time. So This was, when we talked, it was back on January 5th where this vertical cursor is right here. Just to give you an idea, I had talked about the heat crack, and the heat crack did just finish this bear structure down here and broke back above this low here at 49.57. And I said that this is likely about to start a new bullish correction or structure to the upside. And just to give you an idea, from that date, in the next 4 days, if you can see my drawing tools, I already drew it up here. That was if you were long the heat instead of the crude oil, you would have made $10,000 per contract more being long the heating oil in 4 days.
I mean, and just top of what? In top, I mean, 10,000 on crude, but 20,000 on the heating oil.
Exactly.
Shut the front door and raise your hand. Boy, that's really good news to know.
And just to give you some perspective, the average daily range of the crude oil at that time was $2.44. So you were basically making 4 more entire crude ranges by being long the heating oil as opposed to being long the crude. And then on top of that, the unleaded gasoline also on the 9th broke above a formation, and that rallied 7,550 more than the crude did to the upside as well.
Wow.
And right now we have some really exciting things going on because there are some major formations that we have in front of us, especially the unleaded gasoline. Just want to show you this real quick. The unleaded gasoline just broke above this major formation here on the 15th, and that formation projects this upward. The trade above 248.56 projects this upward 26 cents minimum, 64 cents plus maximum. And so we're only 12 cents into that so far. So that has major potential to the upside. We're also traveling back up, just testing the bottom of this channel a couple different times. Once we punch above that, this thing that could really open up the upside. And in addition to that, the heating oil also is just under a major formation here, and a break above that is going to project this upward, at least 60 cents to the upside. If
so, you're still looking.
What's that?
It has to break above those highs to give those higher projections.
It's got to break above this formation line right there, and in the heating oil, that comes in at. 331.37 minus 1 tick per hour. That was starting at 8 o'clock this morning. So those are some very major moves to the upside that could be on the horizon. And we already know that the unleaded is broken above its formation, so it's already on the go.
Mm-hmm. Wow. That's really good information to know. You always want to buy the strongest and sell the weakest. That's good information.
Well, just remember this: don't get into that sucker's thinking that says, "Let me buy the laggard because it has to catch up." Right?
Yeah.
You know, to me as an analyst, that's the way I would normally think. Like, okay, well, let me get the one that's behind because it's going to have a mean reversion or whatever. But when these things are trending, the one that's leading the charge is going to be the one that's going to pay you the most to the upside. As you can just see, just from that heat crack, it was leading, and then the RBOB took over leading. So and you can just see in just a short amount of time, in just 4 days, that's a difference of $10,000 a contract more. So it's definitely, it only takes a little bit of mental work to wrap your mind around 3 different spreads. Mm-hmm. The RBOB crack spread, the heat crack spread, and the RBOB to heat spread. When you refer to a crack spread, tell the folks what that means. The crack spread is it's an actual industry terminology for this spread. That's because when the oil is brought into refineries, they go through a machine or a process called a cracker. That's literally the name of it. And it cracks out of the crude oil, either unleaded gasoline or heating oil, amongst a bunch of other products. But those are the 2 main products that come out of it. So when there's a spread between the underlying product and the crude oil, it's called a crack spread. So if the crack spread is bullish, right? Let's say the heat crack is bullish. That means that the heat is strong relative to the crude, or the crude weak relative to the heating oil. That doesn't mean directionally that they're going up or down. It just talks about the relative strength between the 2 of them. Okay, that's much like when you have the soybeans with the crush spreads and stuff like that. Exactly. Okay, exactly. That's 10-4. I catch you right there. So please continue. I think you wanted to take a look at do you want me to move away from these and take a look at the unleaded, the natural gas, or did you want me to drill please. Whatever fits in. We got another segment coming up, so go ahead. Let's start with natural gas and then move on. Okay, we'll just go through these kind of quickly. The natural gas, if you recall, last time we talked, I said that trade below $4.99.30 will project this downward $2.30 minimum, $4.80 plus maximum. Obviously, from $4.99.30 going down $4.80 would be a major move and just completely crush the market. I don't know whether we'll see that maximum or not. And people have laughed before my predictions, but when crude oil was trading $43, I said it was going to come off 26 minimum, 34 plus maximum, and we wound up going to negative $40 a barrel. So anything's possible. Yeah. We've got to pay a few bills. We've got to pay a few bills, Mike. What's that? We have to pay a few bills. We'll be right back in about 2 minutes, okay? Okay, sounds good. Mike Moore, folks. More analytics. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we have on the line Mike Moore of Moore Analytics. Would you please continue, Mike?
Okay, thank you. So can you still see my screen here?
Yes, sir. We're all set up.
This is the natural gas. If you recall, last time we talked, let me just pull this up here. It's not pulling over into this screen for some reason. Well, anyway, I'll just speak to the chart. I'd said that if we broke below 499.30, that this was going to be projected to the downside. $2.30 minimum, $4.80 plus maximum. You can see we've already seen a good piece of that to the tune of 17 grand a contract. We're also down in this major line right here, and the last retracement level of this move up. So if we really keep punching below here, that just warrants that this is going to continue to cascade to the downside. Mm-hmm. On the lower time frame charts, we've come down. We're sort of bottoming out these lows here. They're getting shallower and shallower as the highs. The rate of change is changing also. So there could be a good chance if we break back above this minor line right here, a pop up to this next line, and a pop above there would probably bring in another 400 or 500 ticks worth of strength above. Mm-hmm. And I just want to move through a couple things quickly. So also wanted to talk about
Al, I have lost contact. Al, am I still with us? Something's happened. We've, at least from my end, I've lost contact. So can anybody hear me? Al, can you hear me? Wonder what happened to Mike. Oh, the old technical. They didn't have this trouble on Star Trek Voyager, did they? Anyway, we'll try to get him back on the line here as best we can. Okay, hold on with us, folks. Just give us a few more minutes. We'll take a look at these markets here right now. We're coming back really strongly now off that bottom so far. The S&P, we've come back 30 handles, and we've also come back 250 points in the Dow Jones. So that bottom could be what we're waiting for. So it's going to be an important one because got to watch the 382. Now, the 382 and this E-mini that we're looking at from that high that we made at 40.30 down to the low at 3,900, that comes in at 39.55, and we're not that very far away. If we kept this rise up that we've had here in the last 15 minutes, we're going to make it real easily because that number comes in new high on the day at 39.55. So watch 39.55 if we get there. Going to be very, very interesting to see that. Evidently the chart has missed too, so there's not much else that we can do with that. I can put my chart up, that's for sure, but we'll do one thing at a time here, and hopefully Mike will get this up and we'll be able to see it without too much trouble here. Oh, not the wrong one. Give me a break, Larry. Hold on a second. We're doing these under pressure. There we go. You see, we just bounced off that number. That actually the number is 3,900, hit 3,901, and so we're going to be seeing if we can get up into this area here, up around 3,950. So we're still trying to get Mike Moore back. What we're going to do, folks, is we've only got 4 minutes to go in this segment, and we're certainly going to have Mike in again. We'll have him in on Monday, I believe, so we can review what he's doing. Anybody that gives us this type of good information deserves to be, put in the thing. So we'll see. Okay, the computer, his computer is shut down, folks. So we're going to keep going with my show here, and I will put right in here, no problemo. And one thing I do want to mention here is that Mike has a service for auto trading. So if you'd like to follow what Mike does with your broker, get in touch with Mike Moore at moreanalytics.com, and you can see how he does it. It's an auto trading program. It would really behoove you if you want to have someone to do it for you. He has a service that does that. So that's what I know. I'll tell more about it when we have him back on the show on Monday. But his computer's just crashed. The whole thing. He just texted me on his cell phone to let me know that that's what happened. So we'll move on here to see what we've got going here. Let's just take a quick look at the markets to see how much we've come off the bottom now. We went down to that 39.02 again. We've rallied up to 39.30, rallied 30 handles. We rallied 250 points in the Dow Jones. We rallied about 85 points in the NASDAQ and about 12 points in the Russell. Let me see. The gold is just made another new high of the day there at 1925. Let's try it again, Larry. 1927 again, and so it's going to be interesting to see how these things unfold. We got copper up 10 cents after being, down about 4 cents yesterday. After we make a high at 437, it dropped 21 cents down to 416. That's not 21. That's 12 cents. And now it's rallied back 10 cents. So it's still a strong bull market in the copper market. The currencies, the dollar's weakened a little bit, with the euros up just a tiny bit. The pound is up a tiny bit. Canadian's up a tiny bit. And the yen is down. Actually, the yen is basically unchanged. So it's a big day today, folks. These numbers that we hit today were very, very important. And if we close below those numbers, 3,900 in the S&P, and below that number in the Dow Jones that we made today, this is indicative of a major trend change that has occurred. Remember, we've seen lower tops and lower bottoms ever since January, folks. So we are in a downtrend. And specifically, this has been the worst quarter in the NASDAQ history, folks. I saw that on Bloomberg today. It's a statistic that I found hard to believe because, remember 2008, my God, it gave up 85% of everything. But this is the worst quarter that the NASDAQ has ever had. So very, very interesting here. We got to pay close attention to these markets here for sure. Tomorrow, we've got the wizard himself is going to be on. He's going to be talking to you about the importance of this January 21st date. And it's a lot of things happening that date. The problem is it's coming in on a Saturday, so the effects of it will be in vogue when we come in on Sunday, folks, because it'll be telling us that these things are so accurate. They're only off by a day or two when they're off, and you'll know Sunday night if in fact that's what's happening. So those are just a few of the things that we've got on our plate today. Looks like gold is heading up to that number we were looking for, which is 1975. That is the 78% retracement on the long-term weekly chart on the gold market, and that means that we should get silver to 25.03, folks. That's the main thing that you want to be looking at, 25.03 in the March silver. Still an easy chance to get to that level. With metals going up and crude oil going up, in fact, many of the commodities are going up, it's going to be difficult for the boys in the Fed Reserve business to keep inflation at bay with the fact that the interior commercials or the materials are going up so very, very rapidly. Look at crude oil today, folks, a $3,000 rally for heaven's sake. Being down 3 and up 3, that's a $6,000 rally. Nothing like we saw in the S&P the other day. If you remember, $25,000 in one day in the S&P. So wild times at Ridgemont High, as they say in the trade. So let's take a little break. 877-927-6648, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, Mike Moore's computer did crash, and so he's going to be back with us on Monday to go over some of these things. I've been waiting to find someone that's a real expert in the oil market for a long time, and we have found him. So we want to keep Mike happy and have him back on to talk to us about these things. That when you make, he really made a big commitment when he said on January 5th, now is the time to buy crude oil. I remember him coming back on and said, this is it. This is the call. And look at it, folks. It moved $9,000. Heck, it moved $6,000 today, down 3, up 3. So, and the low today was a 382 off of that January low, right on the money. So that's it. So tomorrow we're going to have Norm Winski as our guest, and he's going to be talking to us specifically about what's happening on January the 21st. And those of you that know Norm, he doesn't bring these dates in lightly. So he's going to have some nice things to say about it. I believe has a big factor of it, of course, is the Mercury event that I think is happening. But again, I'll let Norm tell us about that tomorrow. So we'll be able to pay close attention. The key thing today, folks, is a close below 3,900 in the S&P, or close below new low ground today, and the Dow Jones will be very, very bearish. And you don't, if you're bullish, you don't want to be standing in front of these freight trains, because you can see how quickly we gave back 110 handles here in just 2 days in the S&P. That's a sign that, wow, there was something going on. And when you see some of these stocks that are out here that are still getting hammered, you got to be careful. Protect yourself, folks. Remember, it's not what you think, it's how you think, and you got to be able to protect yourself by using a stop, because if you don't use a stop, you're telling Mr. Market or Mrs. Market that I really know more than you do, so I don't have to fear you. And that is not something that they like to hear. So you better pay attention and use money management, because if you don't, back to the drawing board. See you tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.